trading, and I can genuinely tell you this, crypto is absolutely not what you think it is. It's a very highly volatile instrument. Now, can you actually make money by trading crypto? The answer is yes, you can make money through crypto trading, but you will have to learn the rules of crypto. Look, there are so many strategies out there that can continuously make you money, but I'm still telling you, these people won't even talk about those specific strategies. People that has a table, for example, lack extensive knowledge regarding funding within crypto. They also lack significant understanding of option selling. What everyone is primarily doing is future trading. They're only trading based on whether prices will rise or fall. But despite this, I will endeavor to share with you all the findings from our research over the past year. What's proving beneficial? What's causing harm? We won't just tell you, we'll show you. So if you look at my screen right now, a crypto trade is still active here. But in this account, you'll notice that most of the trades you see are options trades. We're trading in options and we're also trading in futures. But what exactly we're doing and how we're managing the risk involved, I'm going to explain all of this to you in detail.
Now, we are going to start one by one. First, please direct your attention to my screen.
When I begin to talk about crypto trading, the very first question that comes up is, what exactly is crypto? What is it really? Now, if you consider the common definitions people use, they often refer to it as a digital currency. People often discuss the idea that Bitcoin will replace the dollar. You won't even require Indian rupees at all. Anyway, using cryptocurrency provides an incredibly straightforward and efficient method for transferring funds. This becomes especially relevant when we are discussing stablecoins. Regarding stablecoins, as you are probably aware, a significant new bill has recently been successfully passed within the United States. So stablecoins, for example, such as USDT, you understand. Therefore, whenever we refer to stablecoins, we gain the ability to transfer money with remarkable simplicity and speed. Suppose you need to send money from India to Dubai, from Dubai to Malaysia, from Malaysia to Singapore, to Vietnam, to America, and also to Australia. As you can transfer that money in mere seconds using cryptocurrency. Previously, you would have had to do it through a bank, and for that, you'd need to enter a SWIFT code. If it takes some time, that's perfectly fine. It's incredibly easy to send money. You simply send Bitcoin, and the person on the other side will also receive their Bitcoin. So, the process of transferring money is becoming incredibly simple and straightforward because of this. But when we talk about coins, let's first consider what exactly are these coins. So, when I'm talking about Bitcoin here, it's often referred to as the mother of all coins, right? It became the mother currency because Bitcoin was the very first one to be launched. When exactly did it begin? It all began in the year 2008. In 2008, we experienced major financial crisis, a complete collapse. The stock market had completely plummeted. Banks were closing their doors everywhere. So someone must have realized we absolutely cannot place our trust in banks. That's precisely why they invented Bitcoin. Now, many people claim Satoshi Nakamoto was the one who did it. I personally have no idea who Satoshi Nakamoto is, but if someone did, I strongly suspect it was a frustrated person whose hard-earned money was held up in a bank. When Lehman Brothers collapsed, his money must have been lost. So he thought that from this, Bitcoin, a digital currency, could be born. And what happened here? It will be decentralized. Now, decentralized means banks are controlled. Okay? Banks are controlled. The government has control. Our Indian banks are controlled by the RBI. But no single entity has any control over decentralized currency. Secondly, you've now understood that it's useful for transfers. The second benefit I understood is that it's decentralized. No single party or country controls it. The third thing is its supply is limited. So, because the supply is limited, what happens is that its price keeps going up as demand increases. So if you look at my screen, I'll show you the Bitcoin chart here. Let's move to futures. We're also on the Delta Exchange platform. Okay, so this is simply our Bitcoin chart. And if I show you the daily chart, you'll see Bitcoin has been rallying long term. Right? Long term, Bitcoin is moving upwards. But if you look, it's very volatile. It has very volatile moves, going up and down, up and down. This is Bitcoin after all. Now your question might be, if the supply is limited, exactly how much is it? The total supply of Bitcoin is that there are only 21 million Bitcoin available. Out of the total supply, almost 19.9 million Bitcoin have already been mined. Now, what exactly is this process of mining? Basically, whenever you send Bitcoin to someone, right? You send BTC from one address and it goes to another. So where exactly will this transaction be stored? It gets stored on the blockchain and everyone can see it there, where they are moving. Now, when all of this gets stored on the blockchain, a problem is created here, you see. And this problem is being solved by large, powerful machines, which we call Bitcoin mining machines. So because this problem is being solved and the Bitcoin miners have set up their powerful machines, these miners should definitely receive some kind of reward, and in return for their efforts, they are given Bitcoin as a reward, right? So because Bitcoin is received, this is the core concept of Bitcoin mining, that Bitcoin is actively being mined. So, as this process continued, with problems being solved and transactions occurring, almost 19.9 million bitcoins have now been successfully mined. By now, you must have realized that there's approximately 1 million bitcoins still remaining to be mined. So, when these are mined, a significant event takes place, which we refer to as Bitcoin halving. Now, what exactly is Bitcoin halving? Basically, Bitcoin halving is a pre-programmed event. This event occurs roughly once every 4 years. What happens is that the reward for newly mined bitcoins, which miners receive, is cut in half every 4 years. So the most recent Bitcoin halving event took place in April of 2024. Now, if you were to observe the charts for April of 2024, you would clearly see that from that specific point, Bitcoin experienced a truly remarkable surge. So what exactly is the consequence after the halving event? Miners receive significantly fewer rewards, which then inevitably causes Bitcoin's market price to shoot up. So the next Bitcoin halving, when is it? It's going to be in the year 2028. By this point, I truly hope that you have understood the concept of mining. I've tried to explain to you in a very brief manner that the miners, they validate transactions and then they add these brand new blocks onto the blockchain, which is why they get a reward. So this was about Bitcoin. But apart from this, all the other coins, we refer to them as altcoins. Altcoins, by definition, mean alternate coins. So if you go to Google and search for altcoins, you can easily read up on what altcoins actually are, alright? These are also cryptocurrencies, but they are other than Bitcoin. That is why they are referred to as alternative coins. The most popular contract among these is that of Ethereum. Now, transactions also occur on various different blockchains. So as we're currently focused on trading, we won't delve too deeply into crypto itself. Therefore, our main focus will be on understanding how trading actually happens within crypto. So I will make every effort to explain this thoroughly to you. Now, as we move forward into the realm of trading, let's first grasp what most individuals typically do in crypto. They engage in spot buying, which is commonly referred to as buy and hold. Now, someone once made a spelling mistake with the word hold. It should be H-O-L-D, but they accidentally typed D-L instead. Because of this, it began to be pronounced as hodl. And those individuals who purchase cryptocurrencies now refer to themselves as hodlers, proudly stating, we are hodlers, we have held on to our assets. Now, and what often happens here is that people tend to believe the price will go up, just like we have seen Bitcoin's price surge upwards. But in the majority of altcoins, what I observe is a pump and dump scheme. Anyone can launch their own cryptocurrency. You too can launch your own crypto. You can even launch a token yourself. But ultimately, the majority of people here end up making money and then they leave. The speculation involved in this is incredibly intense. The price goes way up and then it just dumps. It happens something like this. So if I were to show you most of the coins, you'd have to completely exclude Bitcoin. Alright, let's exclude these popular coins like Bitcoin, Ethereum and Solana. You can pick any other coin. We'll just randomly click on one. Now look what happened. This is the daily time frame. The coin went up, up, up and then a straight dump. Similarly, I'll just randomly click on any other coin anywhere. This one opened up, look, it went up and then it just dumped straight down. Then just pick any other coin you like. Just click on any one of them randomly. It didn't go up at all. It just got dumped. Just take any other coin. Alright, anyone at all. I mean, what difference does it make to me? Most of these coins tell the exact same story. So that is precisely why I don't prefer the practice of holding within the cryptocurrency space. If you want to know, I'll only tell you what I personally do. I am here to share my own experiences. I have never made any significant investment in crypto myself. And if anyone asks me, I don't really consider investing in crypto a good idea. I invest in ETFs. Okay, I only invest in ETFs. I don't have any major investments in crypto. But if someone were to say, oh man, you're really missing out on a huge opportunity here. Bitcoin, who knows where it's headed? It's going straight to the moon. It's possible I might not make it to the moon myself, but I'm perfectly content right here on Earth. So with what I'm doing, the returns I'm getting from my ETFs, I'm quite happy with that. You need to bring a certain satisfaction into your life, right? So I've worked very hard to earn this money. So I feel that if I'm expecting this and then it goes wrong, I might not be able to tolerate it. So you should only invest in crypto according to your risk profile. If you're willing to take risks, then you should invest, but don't overdo it, okay? And nowadays, people have also started doing this, so that could be a viable alternative, but I personally don't make any really substantial investments myself. Yes, you can see my account is not loss at all. I don't just trade crypto. Trading has a big drawback. You're taking too much risk. I've taken my time. But there's an opportunity in crypto. That's why we're trading. Now, one way I've already explained to you is that you can simply buy. But why is the act of buying so risky? Because your entire investment capital could be wiped out. So when we move on to the topic of trading, is it really that easy? The answer to that question is a definite no. Trading is incredibly difficult because the price movements in crypto are extremely volatile. If you just start things in such a random, unorganized manner, you will absolutely not be able to survive in this place. It is very difficult, very difficult. But are there some specific strategies that are continuously generating profits? The answer is yes, and I will try to show and explain that to you. Now, if you look at my screen, we cannot trade this coin because my margin mode is different. Don't miss the next video. I'll explain step by step what margin mode is. If you want to trade on isolated, then you should switch to isolated. No, my account is actually in portfolio mode, so I'm trading on portfolio. What this is all about, I will tell you everything. So all my current positions that are running here are in options. And the amazing thing is, you see the red color here, which means I have sold. I'm currently running a profit of around $15,000. I don't even want to touch it. Okay, I shouldn't interfere with it because the potential profit here is quite high. Exactly how much that could be, we will explain in our future videos. So these are a few strategies that I'm sharing with you, which are consistently performing well. I will elaborate on these. I will also tell you about the things that can cause great damage. Okay. So there are many things that people might not even know. For example, people have very little knowledge about funding. There are some orders, like when you go to the order section, when you buy or sell. Okay, so whether you're buying or selling, let me give you an example here. Okay, when you go to place a buy order or a sell order, you'll find different order types available here. Okay, limit order, market order, stop limit order. What that is, so all this now, I'll be explaining all of this in detail in the upcoming videos. So make sure you don't miss them, since this was our very first video. I'll tell you what other options we have. So, the very first option we have available to us for trading in crypto is what we call futures. Now, what exactly does future mean in this context? Here, when you go ahead and click on the futures tab, you'll see all the available coins appear right before you, alright? All the coins that are currently listed on the Delta Exchange platform. I am providing you with the link for Delta Exchange in both the description and the pinned comment. Please make sure to open an account on Delta. The link that I am giving you will provide a discount on the trading fees. So if you'd like to get discount, make sure to use this link. Check the description and the pinned comment. If you open an account directly on Delta, you will not receive any discount. Alright, that's the first thing to note. Secondly, if you proceed to trade here, you will see an option for demo trading. If you are new to this, then you should start with demo trading. You will quickly understand. Once you've taken a trade, how profit and loss occurs as the market moves up and down. You will see how it all looks. And in demo trading, you'll get $1,000 to trade with. First, try to make money with that. If you succeed, then do real trading. Yes, there's a big difference between real trading and demo trading. I also don't understand because emotions aren't involved in demo trading. They are in real trading. But I don't want you, if you're new, to just lose money right away, so you can start with demo trading. If you've been here for a little while, let's now understand futures trading. Look, in futures, you can go for any coin you want. For example, if I talk about Bitcoin, what does it say about Bitcoin here? Well, if you check this account, you'll see it's offering 200x leverage. Now that I have portfolio mode, leverage will come automatically. How does it come automatically? Let's say I mentioned I need to buy around 100 and they're automatically giving 190% leverage. But this doesn't happen in other accounts. So I'll show you how it works in other accounts. Let's say we move to a different account here. This is cross mode. Okay, it's running in cross. Now I can select here if I want 250x leverage or 100x leverage. I can select this. I have made my selection. Now leverage. People absolutely don't know how to use leverage. People think that with 100x leverage, if it goes 1% against you, you'll get liquidated. You'll be liquidated in isolate mode. So listen to me. I am in cross mode. I will not be liquidated. Alright, I will go to this point. If I go to this position and sell Bitcoin from the current layout, it will not make any difference. Okay, even if it's done at 200x, it doesn't matter. If there's money in the account, nothing will happen. I will explain that to you later. Alright, so what can we do? We select leverage. What does one mean? One means that as the coin goes up or down, the money will come in just like that. Are you interested in Bitcoin? To help you understand, So for example, with 10x leverage, instead of 90,000, you'll need $9,000. If I take 20x leverage, it will be around $4,600. I hope you've now understood the concept of leverage. So this applies equally to both buying and selling. Then there's a limit order where I can set my own price if I wish to buy Bitcoin. No, not right now. When it comes down to 89,000, then you should buy it. So for example, if I went to 89,000 and I bought 0.1 Bitcoin there. So here there are things called lots. Let me explain what a lot is. If I take one lot, then to purchase that one lot, I would only need $4. Okay. So you can buy in lots. You can buy in USD. Alpha, you can say, I want to trade with a notional value of $100. Then it will cost you $4. Dollars for a $90 notional value. If you go for a $1,000 notional value, it will cost you $50. The same leverage scenario. So this is buying at a limit. There's also buying at market. When you go to market, you directly say how much to buy or sell and you'll get it at the current price. It's showing you the price fluctuations right here. Pause. Alright, if you purchase these illiquid coins in the market, you will immediately face a loss. Pause. This is precisely what I am trying to convey to you. So, within futures trading, we have the ability to both buy and sell, an option that is not available to us in spot trading. When we were involved in spot trading, if you recall, we were exclusively focused on buying. In the spot market, we were only able to buy. We didn't have the option to sell at all. But what exactly happens when you trade in futures? If I anticipate the price won't rise but will actually fall, then I have the ability to sell it as it declines. This is a significant advantage that I gain within the futures market. The other thing is, with futures, I gain leverage, which I wasn't able to get in spot trading. This allows me to trade using leverage. That's why people engage in futures trading. There's one final method for trading, and that's through options. You won't necessarily find options available for every single asset, but on the Delta exchange, you can specifically get options for both Bitcoin and Ethereum. These options also come with various different expiry dates. Overall, options are truly an amazing and powerful concept. Alright, just like I had previously demonstrated and shown to you on my main trading account. If you take a look, I am exclusively trading in options. Even in the other algo, we were trading both futures and options. So there's a unique beauty within options, in both buying and selling. It's not just that only selling is always beneficial. In the upcoming video, we will delve into options in great detail. When it comes to options, you have the flexibility to buy. You also have the ability to sell any underlying asset. But to understand how options truly function, you'll need to wait for our next video. Okay, please explain this to me in detail. I am not in any rush. I hope you aren't in a rush either. So if you're interested in learning crypto trading in great detail, I'll need to see your level of interest. Please write yes in the comment section. Yes signifies that you're interested in learning crypto trading in detail, and if so, I will certainly give it a try. Now, if the response turns out to be really great, then I'll absolutely take my time and potentially create 15, 20, or even 25 videos. However, if the response to this series appears to be just normal, then I might try to give you a general understanding within 10 videos and then conclude the series. Everything depends on your response. The views will definitely come. If you share this video, then I'll feel that yes, you are truly interested. Now, if you truly wish to learn in more detail, I am repeatedly telling you this important point. I will share with you from my own personal experience, and I am telling you this right from the start. The crypto market is very, very risky, extremely risky. People often say if there's risk, there's love. But even so, I'm telling you this, we must control and manage the risk. How will you control it? This is what I teach you, just like we do it ourselves. I will teach you everything. You just need to stay with us. You're getting to learn this for free. For courses like these, people are charging you thousands, even lakhs of rupees. I know that people often give less importance to things that are free. But if you share this video, like it, and leave a comment, then I'll understand you are truly interested. If you're new, open an account on Delta Exchange today. The link's in the description and pinned comment. In our upcoming videos, we'll be understanding all of Delta's features one by one. It's going to be a lot of fun, so make sure to subscribe to the channel and click on the bell icon so you go self-made and Jai Hind. To be honest, I really don't know if I should make this video or not, but let's go inside the course those who will benefit, because this is my own personal strategy that I'm currently using and it's generating really good funding. How good? It's a somewhat unrealistic figure, and I hadn't actually thought before if I would create a video on this topic or not. But because I've already explained and informed you about funding, I thought, alright, let's go ahead and make a video. And as I mentioned, these are unrealistic returns. Some of the returns are coming in a bit too high. This is an absolutely incredible video. I could have easily charged you a significant amount for this. I could market and sell this as a separate, premium, paid strategy. But I am choosing not to do that at all. I am sharing this valuable information with you completely free. And I won't just tell you about it. No, just like every single time, I will show you, my friend, the exact kind of profit that it is bringing in. Why is it being formed? If this strategy can incur a loss, then what causes it? What its adjustment is, I will explain all of that to you. So now, please take a look at my screen.
But I need you to really focus your attention right here.
Let's just ignore the top section for a moment and focus on the sites listed below it. If you take a look at these 4 specific trades, BTC, Ethereum, ATH, and BSH, you'll notice that collectively, we are currently seeing a profit of approximately $100 to $200. Now, this amount is highly fluctuating. What I mean is, it's quite possible that by the time you watch this video, it could even be showing $500. It's possible this could completely wipe out all the profit. So I didn't take this trade for profit, okay? This trade is not intended to make any profit. Within this, in just a very short amount of time, a profit of $1,000, $2,000, or even $3,000 can certainly be generated. And similarly, a substantial loss of that very same magnitude can also be incurred. Yes, a loss can definitely occur, but this specific trade is absolutely not intended for making any profit. No, this is actually for something completely and entirely different. How to grasp this crucial point, you'll need to pay very close attention here. The cash flows, which many of you completely overlook during your trading activities. You simply don't even bother to check. I will now explain to you precisely how this operates. Before we look at the cash flows here, let me show you a trade. I deliberately took this trade so that I could show you right now I'm currently running a loss of about $500. Let's leave that aside for a moment. Just take a look at this one trade here, the Sine. This Sine USD pair, yes, this Sine USD, I've actually taken a trade on it. I'll open it up now and you can clearly see that my current trade is somewhat $2 in the negative. I'm currently showing a loss of $2. But you know, a $2 loss isn't the biggest concern. Look at the much larger loss right here. In this particular phase, I have already incurred a financial loss of $7. What kind of loss is this? Here I have a $5 loss and over here, I've already made a profit of $37. Although right now, there's a $57, oh wait, a $39 loss is currently running. But still, I've already secured a $37 profit here. So if you haven't understood this point, you will definitely end up facing a loss. Now, this concept, this trading concept, many people are unfamiliar with, and we refer to this as funding. All right then. So, when exactly will these trades by themselves move into a state of profit or loss? For example, take this trade right now. I'm currently losing $34. But at what price is my take profit? I'll be getting $500. This trade itself is for $500. So I've been sitting back comfortably. Until my profit shows up here, I'm continuously receiving funding. Although from this particular trade, I'm only expecting to receive $200. And I've already incurred a loss of $5. Yes, I did end up with a $60 loss on this particular trade, but the profit that's expected from it is $111. So the trade is perfectly aligned with the setup. So, first of all, profit and loss don't make a difference because I have different trades running in my various accounts. For example, a trade is active in this account. Currently, there's a $6,000 profit here. So something or the other keeps going on. But the main point is that you must understand the logic. Now, if you observe here, these cash flows appear quite substantial because of the options. The options have been sold. There's no actual funding involved here. This is a completely different matter and we'll discuss it further later. But for now, we were trying to grasp the concept of funding. So let's return to the funding loss account. Now, if you look here, our profit is currently standing at around $200. So what exactly is the concept behind this? Let's take a look at the funding details. So over the past 7 days, we've received approximately $45,000 in funding. And this is what I call accurate funding. By accurate, I mean the daily funding that consistently comes in, which ranges from 6 to 10,000. Let's say forget 6,000, 5,000 rupees a day. That's 1.5 lakh rupees a month. Anyway, in the last 30 days, we've received over 1.5 lakh in funding. So the concept I'm telling you for free. But the concept is very interesting and very important because here with this same concept, I've also booked a 5 lakh profit. So it does bring profit. I'll explain how it all comes about. So now, if I were to show you something here first, let's take a look at ETC, specifically ETC. Alright, so this is Ethereum Classic. You can actually read up on its history, how when Ethereum first launched, it experienced a hack. After that, a group of people decided that they would remain on the original classic Ethereum blockchain. So, a completely distinct coin had been established, ATC, and its price is absolutely unique. The price of ATC is currently trading at 11.8, while Ethereum's price, as you all know, it's currently trading at almost $3,000. So there's a significant difference in its price. However, what I've done recently is I've taken a long position on Ethereum's brother, ETC, and I've mentioned this to you previously. If you ever long, or to put it another way, if you buy and the funding rate is negative, then you will receive money. What is the negative funding amount here? 0.07? Okay, it changes frequently. It's quite amazing. Sometimes it's too much, sometimes it's too little. Right now, it's a bit on the lower side, but even this amount is a lot. How is this considered a lot? Let me explain. I am getting 0.07 po. Zia says about Mahat Seriala Halda. Yes, 0.07 is what I'm receiving. Each one of these is for 8 hours. So every 8 hours, that means 3 times a day. Now try to understand 0.07 multiplied by 3.
If dude, this is 0.21% for the day, it's nothing. Multiply by 30 for the entire month, it becomes 6%. If you only bought at 1x without taking any leverage. If you didn't take leverage, even then 6% per month will come. But brother, I always take full leverage. I will show you an example. So I came here to ATC, and on the buy side, I'm getting 50 times leverage. I actually need the full 50x leverage. Let me show you the best example. I've taken $1,000 in the trade market here. For instance, I took $1,000 and then I placed a buy order. I'll just place this buy order. Oh, I'm telling you, absolutely nothing will come of this trade. Let's just wait for this trade to come through. All right, it's currently sitting as an open order. I've also got another open order pending, so we'll just leave that one. We'll find out as soon as the trade gets executed. And then we'll proceed to short Ethereum as well. So the return I'm currently getting is 6.3%. But the moment I adjust this to 50, because I've taken the full leverage, I took it right here, right before your very eyes. So notice how this amounts to 315% for the month. I had mentioned that these were unrealistic returns, but this is a 315% margin. I've actually provided a margin of 630 here. So far, with the $630 margin I've provided, I've already earned almost $460 in funding. This is 315% if I hold this trade for the entire month. I've slowly started to increase my investment in this trade. I will explain the logic behind this to you within this very video, what the exact logic is. But $630 will become $1,800, and that will definitely be in my account within 1 month. Yes, the amount of funding can vary. So instead of $1,800, it could potentially be $2,800. It might even come in at $1,500. It can really vary quite a bit, but I will definitely receive this money because I have already bought it. I have shorted Ethereum, and Ethereum's funding rate usually stays standard, a funding rate of 0.01. Now look at 0.01 and 0.07. There's a 7-fold difference in this. Okay, so I'll divide this by 7. Roughly, that's 85%. So whatever margin I'm applying, like the $154 I've put here, almost 85% of that, let's say half, will be credited to me monthly for this funding. Now let's add both. Okay, 300 plus 50. 350% divided by 2. So the margin that will be applied for the combined total of Ethereum and ETC, I will require 175% of that amount. Roughly speaking, it doubles by 100%, meaning exactly 100% of the margin invested is returned, and it doubles to 200%. So if I invested $1,000, I would get $2,000 in returns in 1 month. That's a bit unrealistic, I know. If I divide this by 30, then it's more than 5% of the daily funding. It comes out to 5.8% per day of the money I'm investing. That's 5%. It's become 6%. You get 5.6% a year in an FD. You get 6% a year in an FD. So this is what you get per day. Now let's talk about the problem. If I'm receiving such a large amount, then why didn't I invest millions, even billions right here? Why didn't I put it all in? You need to understand this very, very carefully. So what's happening here? You went long on Ethereum, my apologies, ATC, and you shorted Ether. Now if you take a close look at this, when I went long, ATC showed me a loss of $2,300. While Ethereum, on the other hand, only showed me around $900. Let's just round it up to $1,000, shall we?
Even with this profit, you're $1,300 in net loss.
So what we observe here is a clear correlation between these two entities. However, it's important to note that this is not a perfect 100% correlation. This particular correlation is only approximately 60%. What this essentially means is that if Ethereum's value goes up, then ATC's value also tends to go up. And conversely, if Ethereum's value goes down, then ATC's value also tends to go down. This correlation is a similar correlation, the one between BTC and BCH. Now, if you look here, what I have done with BCH and BTC is that BCH's foundational value right now is 0.0. So I made a buy when it was in the negative. I'm currently seeing a $1,000 profit, and I've received $192 in funding. And similarly over here within BTC, because the funding always tends to stay positive, it's a 0.01% funding. So I went ahead and sold it.